Hello, I'm Jeffrey Ham, equity analyst for Briefing.com. Today is Tuesday, August 5th. Procter & Gamble's current share price is relatively unchanged from when we first recommended the stock a couple of months ago to conservative investors looking for an attractive long-term opportunity. The company's latest quarterly report has done nothing to alter our favorable view. For its most recent quarter, the fourth in its fiscal calendar, Procter & Gamble earned an adjusted 80 cents per share on sales of more than $21 billion. Year-over-year adjusted earnings per share were up 19% and sales were up 10%. Organic sales were up 5% from the prior year. Both the top and bottom line results were better than expected, reflecting the company's superior operations and presence in key markets. Those traits, combined with selective pricing power, helped offset rising commodity and energy costs. Procter & Gamble's vast international presence and competitive positioning continue to benefit from emerging economies as growth in the U.S. and Western Europe remains challenged. International exposure is giving the company pricing power at a time when consumers in the U.S. are less willing to pay higher prices for name-brand products. International exposure also carries the benefit of favorable currency conversion rates, thanks to a weaker dollar. Gross margins narrowed by a considerable 160 basis points to 49.2% during the quarter. However, operating margins were up roughly 50 basis points to 18.1%. Until energy and commodity prices ease, margins will remain pressured. In turn, we believe the company must remain committed to both operational proficiency and higher margin products, like razors and health and beauty products, to protect profit margins going forward. For the current first quarter, management expects total sales to increase between 7% and 10%, or between roughly $21.5 billion and $22.2 billion. Operating margins are expected to decline 80 to 140 basis points as lower gross margins offset productivity improvements. Earnings are expected to range from 98 cents to $1 per share. Those ranges are in line with analysts' expectations. I'm Jeffrey Ham for Briefing.com, and thanks for listening.